Right now, HMRC could basically be paying for your car. HMRC are not exactly helping with people with tax right now, but there is a completely legal way to upgrade your car and HMRC will pick up the bill. So imagine this, driving a BMW, Mercedes, Tesla, but only paying what it costs to run a Dacia Sandero. Now that might sound too good to be true, but it's not. It's just using HMRC's existing rules in your favour. Company cars are probably the most misunderstood tax break in the UK right now. And that misunderstanding is costing thousands of people just like you an absolute fortune every single year. Let me show you what's happening for most people. Say you're earning 50k a year, you want a decent car, nothing flash, just something reliable and professional, maybe a nice hybrid or electric car worth around 35k. If you lease that car personally, first, HMRC takes their cut. On 50k, you're paying roughly 7,500 in income tax and 5,300 in national insurance. That leaves you with 37k in your pocket after tax. Now, a typical lease on a 35k car can cost you around £500 per month. That's £6,000 a year coming straight out of your already taxed income. So in real terms, to pay for that a £6,000 lease, you actually need to earn about 9,600 gross, nearly 10 grand of your salary just to drive around. By understanding HMRC's own rules, you can get 40, 50, or even 60% off that cost. You could literally be paying Dacia Sandero money while driving a BMW. So before we get into actually how to do this, let me just run you through what determines your tax bill on a company car. There are 4 factors, and once you understand these, you'll see exactly how to play this game. First, you've got the P11D value. That's just the list price of the car, including VAT and delivery. Second, you've got the CO2 emissions. Lower emissions, the lower your tax. The third, fuel type, petrol, diesel, hybrid, or electric. And fourth, the benefit in kind rate, or BIC. This is the percentage HMRC use to calculate your tax. So here's the bit to remember. Electric cars have a BIC rate of 3% in 25-26. You'll see why this is important in a moment. So let's take a look at a real example. A 40k electric car could be a Tesla, Model 3, Polestar, whatever takes your fancy. If you've leased a Polestar, this will cost you around £350 per month, but you have to pay this after tax. So let's break this down. As a 40% taxpayer, to have £350 in your pocket, you need to earn 583 gross. That's because HMRC takes 40% income tax plus national insurance. So your monthly gross cost is actually £583. So over 3 years, you think you're paying 12,600, but the total you need to earn is actually 21,000. HMRC has taken £8,000 in tax before you even see the lease payment. So that car is actually costing you around 21k. But through a company car scheme, it all changes. This is where salary sacrifice comes in. Instead of taking your full salary, getting taxed on it, then using what's left to pay for the car, you agree to reduce your gross salary in exchange for the company to provide you a car. You're using pre-tax money, meaning that HMRC never gets their hands on. You save tax in 2 ways. First, because your gross salary is lower, you pay less income tax and national insurance. That's an immediate tax saving right there. Second, because an electric car with a tiny 3% benefit in kind rate, the tax you pay is going to be minimal. So let me show you the numbers. So a personal lease on a 40k electric car, your monthly payments are £350. So the total cost for the year is 4,200. To have 4,200 after tax, you need to earn £7,000 gross. That's because as a 40% taxpayer, HMRC takes 2,800 before you even see it. So the real cost to you is 7,000 per year. Let's look at the same car through a salary sacrifice scheme. The car has a benefit in kind rate of 3%, so 40k times 3% is 1,200 taxable benefit. As a 40% taxpayer, you pay 40% of that 1,200, which is 480 per year in tax. Your salary reduction to pay for your car is £350 a month, which is 4,200 a year. You actually save tax on the cost of the car, so that's 4,200 at 40%, which is a tax saving of 1,680. So the real cost to you is 4,200 for the cost of the car, minus 1,680 in tax savings, and then plus £480 in benefit in kind. This means it's going to cost you £3 grand a year. You've just saved yourself £4 grand. So if you've leased it personally, it would cost you £583. Whereas through a company car scheme, it only costs you £250 per month. So for the price of a basic Dacia Sandero, you're getting a brand new Polestar. Cheers, HMRC. Now, if you're a business owner or a director, it gets even better because now we add corporation tax savings into the mix. When your company provides the car, either through salary sacrifice or a direct benefit, the company can claim tax relief at cost. That's 19 or 25% saving right there. Depending on your company's size, let's say your company spends $4,200 a year on your car lease. With corporation tax relief at 25%, that's £1,050 saved. You'll still need to add the 3% benefit in kind, and that's £480 per year. But then you take away the amount you saved in personal tax if you bought this personally at 1,680. That means your car will only cost you 1,950 per year, or £163 per month. And I'm not sure you can even lease a car for that much. Now, if you want to know where we're getting all these figures from, we've got a guide on exactly where to look and what to find, so you can also save money on your company car. You can download it in the notes below. With the money you'd spend on a personal lease for a basic hatchback, for the same money, you could be driving a BMW i5, a Tesla Model 3, a Polestar 3, maybe even an Audi e-tron GT if you want to push the boat out. If you want a new car and you use this scheme, HMRC is basically paying. So there's a quick warning though, and this is where people get caught out. From April 2025, any electric car over 40k gets hit with an extra charge. It's £390 annual supplement plus £190 in road tax. It's still worth it, but if you keep your P11D under 40k, you can dodge this completely. The sweet spot is an electric car between 30 and 40k, maximum benefit with hardly any tax. Now, if you're not ready for full electric, and to be fair, a lot of people aren't, let's compare your options. So if you get a petrol car, for example, a Skoda Superb, which costs 38k, that's a benefit in kind rate of 30% because it's petrol. Annual tax bill for a 40% taxpayer of 4,560. At this point, it's not really worth it going the company car route. What about a hybrid or a FEV? Skoda Superb also has those in the range, and they cost around 41k. But that has a benefit in kind rate of 6%. So an annual tax bill of 2,460. So that's 2,100 saved on just a straight up petrol car. Or you can go for a fully electric Skoda at 39k with a benefit in kind rate of 3%. Annual tax bill of just 467. That's a 4,100 annual saving. While not everyone wants to go electric, you can save a serious amount of money by going with an EV. And if you can't make the jump, a FEV is still a pretty good option. So let's talk about vans. If your business generally needs a van, HMRC has completely different rules. There are no P11D calculations or emission tables. It's just a flat rate tax. So a petrol or a diesel van is a flat rate of £4,020 taxable benefit. That means it will cost you £1,608 in tax for a 40% taxpayer. But if you go for an electric van, there's no taxable benefit, so there's no tax. So for any electric van, you're going to pay nothing. It doesn't matter if it costs 20k or 60k, you're not going to pay any tax. So here's the playbook for getting HMRC to pay for your car. Strategy 1, go electric car through salary sacrifice. This is a no-brainer. It's a 3% benefit in kind rate, you get double tax savings, and you're driving a premium car for economy money. Strategy 2 is stay under the 40k list price. You pick an EV under 40k and you dodge the luxury car penalties completely. Unlike a few years ago, there are loads of cars in this price range. Strategy 3, the mileage alternative. If you absolutely must have that gas guzzling Range Rover, keep it personal and claim 45p per mile from your company instead. You'll dodge the benefit in kind entirely and you'll still get tax relief. Then there's strategy 4, a company van. If your business genuinely needs a van, this is the cheapest option going. Right, Quick reality check on what trips people up. Always do the calculations first. You can check this on websites like Comcar. So even if you think that favour is going to save you money, don't assume, because you just need to double check first and make sure the benefit in kind rate is reasonable. It'll cost you more to get an electric car over 40k, so you need to factor in the extra £580 annually. And if you get a van, don't use it as a family car. HMRC will slam you if they find out. And look, HMRC is taking enough from all of us already. Corporation tax is up, dividend tax is up, frozen income tax bans that are basically stealth taxes. But this is one area where their own rules work in our favour. Company cars through salary sacrifice isn't a loophole. It's a government incentive to get us into cleaner vehicles. And if HMRC wants to subsidise your BMW, why on earth wouldn't you take it? The difference between doing this right and wrong is thousands of pounds every single year. So if you don't get your sums right, you could lose any tax savings and HMRC still wins. So here's what you need to do next. If you're an employee, go to your HR department today and ask about salary sacrifice schemes. If you're a business owner, you can set this up yourself, or you can contact us and we can help you get the most savings out of your company car. So before you go out and buy a new car, see if HMRC can pay for it first. If you need more information on the rates, just download our guide in the notes below. At the end of the day, it's your money, and it's about time you kept more of it.